The challenge is running a country. So running a country, setting up the city, doing all the infrastructure, and Qredo is doing that today. There are a little bit warmer days in winter as well, so I don't think this is completely over in some degree. I actually kind of hope that it does stay a little bit longer in some degree, because we will begin to see people building in a very serious way and not paying so much attention to simply just price. We are starting to stay away from undoxed founders because we need to see serious builders.
Hi everybody, this is Yannick Collins and welcome back to Oz a Living, where we bring you crypto news and conversations from only the sharpest minds in the space. And joining me today is Wen Loong. He's the venture partner at Qredo. So Wen, thank you so much for joining me today.
Well, thank you for having me. It's a pleasure.
So I wanted to go back down memory lane with you and talk to us about how you got into the blockchain. Tell us all about your background.
Sure. For me, I started in crypto in 2017 during the ICO phase. Some friends around me were talking and they were mentioning that, hey, there's something interesting here as well. So I decided to look at it myself as well. Back then, I was still practicing law, and then in my free time, I would read a little bit about it. And the more I read about it, the more interesting it seemed. And it was also the first thing I had started to look at. So I decided to try some investments. Or back then, I wouldn't be sure you could call them investments. But then, one thing led to another, and I started to look at it a lot more. So that's when it started, and then that was more personal. And after a while, one thing led to another, and long story short is that I found myself, in a VC, and also leading the crypto investments in the VC. So, it did progress, I guess, from then to now. And of course, now I have joined in the startup space and joined Qredo as venture partner earlier this year.
Okay, so tell me about Qredo and all the other aspects of your business.
Sure. So the venture side of Qredo is actually pretty unknown, I think, until now. And we have been pretty quiet about it because we've been building up in the background. Qredo itself is probably known to the market more as a decentralized custody provider. So what we do is really to provide a safe way for you to store your assets on our layer 2 solution or our network. I like to give this an analogy for what we do. So if you don't mind, I'll tell a short story.
Sure.
So I have a friend who was raising a fund for a more TradFi fund. And he went to Thailand to meet some of the families who are a little bit more well off. He met a family that owns a part of the road from the city to the airport. And one way in which the family makes money is to, earn a bit of a toll, right? So you can imagine more cars pass and it's a very popular road, then they will earn money from the toll. Now, if you extend that a little bit, if you control, for a moment, if you, Yanni, control all the roads in the city, and you could charge toll on every city, you earn quite a lot of money.
Exactly.
Right?
Passive income.
Yeah, exactly. When you're sleeping, it's going to do it as well. However, the challenge is running a country, right? So running a country, setting up the city, doing all the infrastructure, and Qredo is doing that today. Wow. If you did that and you made it digital, so we are setting up all the roads between different parties, and that's what I like in our layer 2 solution too as well. I like to extend the analogy often by saying that you would then be able to connect, to the outside of your city. So within the city, there are safe walls, and that's why we enable these assets to be held safely within our layer 2. But in every country as well, when you enter and exit the country, what will happen is that they charge you a tax if you declare it, right? If you're honest and you declare how much you're bringing into the country, maybe 25K, 50K, any amount. It varies from country to country. What happens is that they charge you because that affects their import, export, and all their currencies, etc. Maybe because you're buying certain things, you're bringing certain things out. Our layer 2 is not that different. We also charge you a little bit more when you enter and exit our layer 2. But we also charge, when I say a little bit more, it's just a little bit more than our very low transaction fee, right? So we charge, currently it's about 2.5 pips when you enter, exit our layer 2, which is not much, to be honest. And, when you're done playing around in the outside of the city, you can come back into the safety of our city and do that. And of course, when we roll out our validator program later this year, that's going to be a bit like incentivizing a public good. The police will come and keep the city safe. So that's a little bit about what we do. And of course, then from there, if you decide to use your imagination and expand what that might look like, then I think you'll get a little bit of a sense of where we're headed in the years ahead.
Amazing. Now, talking about bullish announcements, major congratulations, by the way, on the Qredo-Xena acquisition.
Thank you.
Tell me what it means for Qredo.
Well, for Qredo, we are a company that has been growing, and I think that in this time, what we've done is to look at some of the assets out there that are in a good shape, and we think that it's a good time for us to be possibly acquiring. And so this is one acquisition that we've made. And we did this because we decided that the team would be a complement to what we're doing, and the assets and the IP, as well as the technology that they have, is useful and complementary to what we have. So if you read some of the announcements, you'll see, I think, a hint in what's lying ahead. So some of this includes dark pools, some of this includes the ability to swap, and all this from within, if I go back to my analogy earlier, then within the safety of our walls, or the city. And I say walls very loosely because, in a decentralized world, there are no real walls.
Correct. And security and self-custody seems to be at the forefront of your products, right? So could you expound more a little bit about that and why self-custody is so crucial at this time, especially with the numerous countries exploring more about CBDCs? So could you expound a little bit more about that?
Sure. So what you're saying is, I will take in two parts, right? So there's all the self-custody portions and then the CBDCs. Interestingly, I think there is some overlap, but I'll start with the self-custody portion. I think self-custody is important because, as the saying goes in the industry, not your keys, not your coins. Yes. Any exchange could possibly go down. Of course, they're the ones that we trust a little bit more. But at the same time, in light of recent events, there were a lot of parties that we trusted, I think, in the industry. But there's a lack of transparency. And when you don't have access or final control and say over your own tokens or your coins, however you want to put that, then basically you're not really the master of them, right? So I think that's really important because you must be able to pull the plug at any point in time. And this goes for any kind of trading team out there, whether they give access to a third party or if it's a larger organization, then all the more it's important, right? If you do your homework and you're an investor and you're investing in a fund, do they have any solution for these kind of things? Do they have governance in place? So self-custody does tie in with all of that because our solution, for example, allows you to have a governance in place so that no one can really control it or take assets out without the agreement of other parties. And so that's one reason why self-custody is important. And of course, then the fact that these self-custody wallets also enable you to do anything you want with them, essentially. And so you remain a self-sovereign individual. Yeah. Then, of course, the second part of your question is more CBDCs. Yes. And how that features, I suppose. There are many kinds of CBDCs, so I'm just going to treat it as a broad brush and the idea of what a CBDC really is, right? Yes. And so then there are different countries and how they're approaching this. Now, the interesting part, I think, that we can have a conversation about or needs to be developed more is how does a CBDC interact with a self-custodial wallet in many ways? Of course, I guess it depends on the standard that they use and whether they would even accept it, right? Because if it's something that the government wants to remain in control of in some way, in some form, then it cannot leave the wallets that they choose. Then in some degree, self-custody does not really feature that way. But of course, if they are going to choose, say, an ERC20, then suddenly you can take these ERC20 assets everywhere, and these can become self-custodized as well. So I guess the conversation really needs to be developed more. And it depends on which monetary authority you're talking to, or which country is trying to roll out such a CBDC program.
All right, fantastic. And now talking about crypto winter, actually today as we record this 20th of July, the crypto market is looking up. Bitcoin's price is back to $23,000. It's highest since mid-June.
Yep.
Ether's also back up 5%, but we're still seeing several crypto companies plummeting and filing for bankruptcy. So what's your take on the turbulent market conditions? How cold is it going to get from here?
How cold is it going to get? Well, if we're using what you're saying, it's already started to thaw a little bit. But that said, there are a little bit warmer days in winter as well. So I don't think this is completely over in some degree. That could age not very well, obviously. But I do think that we are recognizing that it may be a drawn-out kind of winter, and we are seeing many layoffs in the industry. Of course, some continue to hire as well. Binance is a good example of that, right? Saying that they would hire 2,000 people. But there have been layoffs in general, I think, and it's in preparation for a winter. Now, to me, the idea here, and I actually kind of hope that it does stay a little bit longer in some degree, because we will begin to see people building in a very serious way and not paying so much attention to simply just price. Now, don't get me wrong, at the end of the day, price obviously does matter in some way, in some form. Maybe it's a vote of confidence from the public in some way. And also, of course, the higher the price, there is some kind of reflection that people may exit certain earlier positions. But at the same time, I do think that winter is a good time to build. And I do think that many good companies were born in bear markets. And a lot of people have an alternative name for bear markets. They call it build markets. And so then it's an important time. And if it's a short time, in some way and some form, then there's a very short time in which the markets will respond. And maybe markets cannot even respond fully. That's it. I am kind of watching out till the end of the year to see what kind of movements there are. Whether this is just, I guess, a trap, right? Whether this is not a real recovery. And of course, it's really a bit too early to say. It's just been a few days, right, when the recoveries happen. And there's so many different conditions out there that you can't tell. And also, of course, the interesting thing that maybe I could add to that is that the sudden drops and sudden falls, especially in light of recent events, do show you where some castles are built of cards, right? Yeah. And that kind of shows you the weaknesses and also areas in which we can improve as an entire industry. So I think it's good overall.
That's very insightful. And regardless, we're still seeing the lasting impacts of the crypto winter, and we're seeing projects that may die through this bear market. What kind of projects are you most concerned about? Are there tokens that people should be dodging away from? I'm
not going to name specific names, I think. But I do think that people should do their homework as well, of course. At the same time, my favorite thing to say is about risk management or maybe risk appetite. Mm-hmm. Everyone needs to kind of manage their portfolio well and not over-deploy. And risk appetite is definitely a thing that will govern how heavily and how aggressively you go in the space, right? And this isn't actually very, very new. In the traditional finance markets, it depends how much you want to deploy to alternative assets in the first place, right? When I first joined crypto, I like to joke, and I guess it's still quite true, that VC investments alone are already considered alternative investments. Uh-huh. And then you consider VC crypto investments is the alternative of the alternative. You can't get more alternative than that, so to speak. And so I think people should accordingly tally their risk and decide how much they wish to apply. Now, of course, generally speaking, hopefully the higher the risk you take, the higher reward. That's not always true. And so then to come back to your question, which ones to avoid? I think, we are starting to stay away from undoxed founders because we need to see serious builders. It's not to say that you can't invest in these, but I would not necessarily call it investing anymore. Mm-hmm. And I think that it's important to differentiate the two a little bit more. Mm-hmm. Now, of course, I have no issue with speculation in some way, in some form. Maybe it's kind of fun, maybe it's useful, and it does provide some kind of returns that are, outsized returns, of course. But then at the same time, I would generally shy away from these, and even personally speaking, maybe take less risk and take less punts and focus on the ones that are actually seriously building. Because if you're intending to stay in the industry for a long time and to continue deploying, investing, and moving the whole entire cycle through, then there's no real rush.
All right, so in terms of for VC, where's the attention going? What kind of industries are you looking at to invest in? And how do you decide which projects to back?
Oh, that's a tricky question. Mm-hmm. Well, first of all, I think we're pretty opportunistic and we are open to speaking with almost anybody in the entire industry and seeing if there's some interesting way of collaborating. But at the same time, I think that when we do look to collaborate, we want very clear markers of how they want to collaborate with us, right? So are you looking to build on our layer 2 or with our layer 2 solutions? Because we have wallet solutions or use our signing solutions, for example, like MetaMask institution does, right? So then some other steps, do you trust our technology? Would you even already consider using it for your treasury management? If you already have a vote of confidence in return, and we see that you are an investable company, then we want to pay a bit more attention, right? So I kind of liken it to a bit of a filter, right? So if you aren't already very clear on how you want to partner with us or grow with us, then we are less likely to deploy, and we have very clear directions that we're taking, at least in this period of time. We want to focus on those who already want to work with us, want to partner with us, and have a clear roadmap for how they want to do it. Those are the ones that we will pay attention to. As for specific verticals, there aren't really any specific verticals, generally speaking. Of course, I think we would try to avoid all devices, right? For sure. But that's it. Of course, to be fair, it is a decentralized custody platform. And if, let's say, some of these companies end up using our platform, that's something that we can't control, obviously. Otherwise, we won't really be too decentralized with it. Yeah. And the last of it, I think I would say that we want to focus on complementary services. Mm-hmm. And I think I would start there. So,
like complementary services?
Yeah, so complementary to what we do, right? And the thing that we have an advantage in, I think, is that we are a custody provider, right? And that means that we can work with a whole lot of people, a whole variety of people, right? They could be building right at the very top of the stack. They could be building, other things. And if they are doing a protocol, could they work with us? And if we do invest in them, we could even prioritize, putting the assets, because they are partners, deep and close partners with us. So we can prioritize putting their assets on our platform or to enable the safe custody of it, so that their partners in return can have custody of it, and they can work together with us to promote them, their solution and our product together at the same time.
I'm really fascinated about VCs because you give opportunity, because I think many people don't have the luxury to raise seed rounds and things like that. So how can people reach out to you and to pitch their project?
Well, we definitely have a website. You can reach us out, and you can also, I'm sure Yenny will leave my my Twitter handle. You can reach me there, and you can also always just email us. We have an easy way of contacting us. It's on our website, or you can just email me directly. We've got spam breach, so we can cover that, and my details will be left there.
Lastly, let me take you back to the crypto winter. Is this a great time for VCs? What is your attitude towards the bear market? It
should be quite clear, I think, from what I said earlier as well, a little bit, that these are good times for us, I would say. Of course, I would be lying if I said there's no concern whatsoever at all. Yeah. I think if we're realistic about it, that there are, here and there are some minor concerns, in the sense of, it's always a very human worry, what's going to happen this time? Is it different in a bad way, right? We always say it's different this time. We maybe mean it in a good way, but sometimes you wonder, is it different in a bad way? Very honestly speaking. But at the same time, it's a good time to build, as I mentioned. We've seen good companies come out of the .com era, right? And I literally was just reflecting on this the other day. Some of your vanguard in the internet today, or considered internet companies, that's a pretty old term, I would say. But the internet companies, they were founded roughly during the .com era. And these 5 of them, I guess, that you can think at the top of your head, right? Meta, Amazon, Netflix, Google, even Ali. They came out very strong, but it took them many years. And they built quite successfully during that period of time, and they survived. I think that's one good reason, or one good way to look forward. If a company is seriously building, and they were wise enough to raise some money ahead of these times, which thankfully we were, then they are in a good state, right? Of course, there's no guarantee. All startups are startups. We are a startup as well. And we have to watch how we spend the money that we have, be wise about what we do. But all said and done, hopefully things work out. And we are building towards that. We do have things in mind. I work with the team very often to decide how we're going forward. We plan by quarters and then by halves, quite actively actually. So as to manage, of course, the burn, how you want to deploy, returns, and all across the board, working on the unit economics, making sure that everything turns out, for every action that we spend. So it's a great time. It's a great time to build, and to build seriously, because you build in a manner that's pretty lean, and you hopefully are more efficient.
Well, Wen, this has been so insightful. Thank you so much for coming in on the show. I really appreciate your time, and let's do this again.
Oh yeah, for sure. Anytime. Let me know.